I'm going to take you through some trade examples looking at the USD versus the Canadian dollar in 2015. So these are the trades that I took. So this is a pretty good example. It's not always as rosy as this, but this will serve to show you how the principles help you to cut losses quickly and let your profits run. So firstly, when I'm trading, I'm looking to assess the bigger picture macro background. And in this case, I was really looking to buy the USD versus the Canadian dollar. And the reasons for this was, one, the Federal Reserve in the US was looking to hike rates, which is positive for the dollar. And at the same time, there was a whole raft of other fundamental factors why I like the dollar. But that's the obvious one here, just to keep the example quick. And we had in Canada, the Bank of Canada looking to cut rates. So the Canadian economy was really struggling because of the fall in the price of oil. And I had a view that oil was going to continue to fall. So the obvious trade there is to look to buy the US dollar versus the Canadian dollar. So what I do though is I'm waiting for the right technical setup to enter rather than just going in based on my view. So my first attempt to get long was on this breakout of this sideways market type, and that failed. And in fact, it put in, once this big candle closed, it put in a major weekly double top. So at that point, I don't really want to be long anymore. We're going to wait for another opportunity. So I've had a small loss there. That's my first trade. So you can see pretty quickly if I'm in, doesn't work, I'm out. And then the price breaks out lower, but I'm not looking to head lower at all or to trade short. I'm only looking to trade in alignment with my view. Now there's always opportunities to trade in both directions, but for me it's just simple and easy to trade in alignment with my fundamental view. It just takes a whole lot of difficulty out of trading if you're doing that. So we got this small downtrend and we had a busted triple bottom. So you can see it formed 3 points where the price stopped, and then the bottom was busted. So it tried to break out lower and then it failed and actually pushed higher. It's one of the trading setups I like. And 3 candles in a row, it's not strictly the best setup, but I quite like the trade and the pair. So when this bullish candle formed, I took my first position. And the price went up a little bit and I was able to add a little bit. But then pretty quickly we had this bearish hammer. So when we see this bearish hammer, we don't panic and get out of all of our position. But for me, I like to take a little bit off. And that just helps improve the consistency of my trading performance. Often you'll see these bearish hammers and then the trend will continue anyway. But in this case, we saw a bearish hammer, we actually saw another one, and then we saw attempts to break higher and a number of bearish engulfing candlesticks. So this was a sign to me that the trend was weakening. So I took some more off here. So I'd taken off 2/3 of my position. And the remaining third of my position I was trailing on this green line here, which is actually a super trend indicator. I like to use the super trend indicator because it's quite mechanical. Or I like to use indicators actually in general often because they're quite mechanical and they take the discretion out of the process. So as you can see, the final part of the position was stopped out here for a little bit of a loss on the final part, considering my average entry was in the middle of these two. But we formed a really nice double bottom here, and so that triggers my re-entry. So I get back in, and then price goes up, and we see the breakout, and once we have the breakout, we get the opportunity to add to the trade. And then we take some first profits. So the price starts to come off, and as soon as the price starts to come off a little bit, I like to take my first part of profits. But then we just let the trade run, and you can see continues to grind higher and higher and higher, and eventually it's actually close to or greater than a 1,000 pip move. So that's quite a nice long-term trade. Went from July, where are we down here, June through to September and up to October, so a few months. And then we have this attempt to break lower and it fails, and we have a couple of bullish candles, and I was able to add to the position here, so put a little bit more on, and then we see this hammer. Now this hammer is quite important because it actually forms a double top. over here. But at the same time we have this sideways quiet market type, and when the hammer failed, I actually looked to add to the position. So just in case it continues, I really like to add to winning trades. But very quickly we see the formation of another bearish candle, and this is a really strong sign that the market is about to fail. It's had 3 attempts to bust through this level. So that's where we start to exit our positions, our remaining positions. And we leave the final part on though, just in case it does continue to go up on the mechanical super trend indicator. And then we get out once this level is hit, the final part. Hey, so it's a pretty good trade, and I was quite happy with that one. Then we have a little bit more that goes on. I still continue to think that the same fundamental factors are in play, and you're watching the oil price and it's still looking very bearish, and the fundamentals of oil are very, very bearish. So we are still looking for another opportunity to get back in, and we see this super trend indicator gives us a buy signal here, but I don't really want to take that because we're in this sideways volatile market type, and I'm looking for a low risk time to enter, not just taking any sort of bullish move in my favour. I'm waiting for a low risk opportunity, and waiting, and then luckily over here we get actually one of my favourite entry signals, and it's called a low volatility breakout. So the price gets really wound up sideways, so sideways quiet market type, and you can see all these little doji candles here, but it's quite easy without looking at the price. You can just look at how tight the Bollinger Bands are. And then we had the breakout. So once we had the breakout, I was in. And when I get a sideways quiet breakout, I like to be adding to my positions. So I take my first position here on the close of the candle, price moves up, take another position on another bullish candle, another position on another bullish candle, and at the same time I'm moving my stop up so that my risk is always limited. And then we get the price start to move back inside the Bollinger Bands after these fast moves. And from experience, I know that fast moves can reverse quickly, and you'll see that in a second actually, later in the trade. So we take a little bit of profit here, and then we form this sideways range, and if we go down to a lower time frame, which I'm not going to show you here, it actually formed a nice little sideways range and another breakout higher. We had the opportunity to add, so that was a nice place to add to the trade as well. And it was also on a sort of a failed attempt to break lower here. Well, it didn't quite get there, it bounced off this minor support that formed. Then we had this wonderful run up, and I had a target up at 145, 146, and I had another target up at 147, so one for each of the positions that I added. And I forced myself to put targets in place because that way I make sure I'm taking profit and I'm not being too greedy. But at this point here, we start to see, after this rapid run up, call it a fast market type, we start to see the price fail, and we see a bearish engulfing candlestick. And that bearish engulfing candlestick actually came as the Bank of Canada dampened chances of another rate cut. So there was market speculation that rates were going to be cut again. I think that's what caused this fast run up, along with the decline in the price of oil. But it didn't happen, and pretty soon everyone started to take profits. And when that happens, the market starts to fall pretty rapidly. So we know when we get these fast market types, not always, when it starts to trade outside the Bollinger Band, that often it will reverse. Even if the fundamental factors still say the same, it's still going to often reverse against us. So in this case, we have taken most of our profit, but we're still trailing our stop on the final 1/3, and we have to suffer a little bit of a loss on this final third. You might say, well, why didn't you take it off all here? Because we can't predict. I mean, it's probabilities. It may continue to hit higher, it may not. So again, I take that out and I make sure I've got a small part of the trade on that just allows me to capture really large wins on occasion. It just continues and continues to go up. I can just keep doing my thing and holding this core position. But in these volatile market types, we generally want to be out. You can see, some of you might say, well, there's a bullish engulfing candle, why don't you get back in here? Well, we're in this volatile market type, and I don't like to be trying to enter in volatile market types. There is certainly strategies for trading volatile market types, and often they're great trading conditions for short-term traders. But for this approach, once things start to turn volatile, then I know if I'm trying to get back in and trading around, it's going to just chew up a lot of my profits that I've just made on the trade. So I'm not being greedy, I'm just out, stop, and then wait. And I still have the same view. So if we do get another really strong technical pattern and the view and the fundamental view is still the same, then I'm going to look to enter back into the trade again and look for another move. And I'm looking eventually for a move back up towards 150, 155 actually. I think that fundamental conditions suggest that that may well be possible. But for now, we just need to be patient and wait for our setup again. And if it doesn't happen, well, it doesn't matter. We don't have to take the trade, and there's plenty of other opportunities around. So we're not trying to force the issue at all. Okay, so thanks for your time today. Hopefully that was helpful. And I must stress yet again that this was an example of things working really, really well. And they don't always work this well. So this is really my best trade, or couple of trades in a row in 2015. So just wanted to show them because they are quite instructive in terms of how you can profit by waiting for opportunities, adding to positions as they go on your way, and then taking profit and managing risk appropriately and not chasing the market. Okay, thank you for your time.